Midcap radar on CNBC-TV18, Varroc Engineering posted a good set of Q4 number. The auto parts maker turned in a strong operational performance. Not just that, it closed the year with an order book of over 5,000 crore rupees. The management is confident of outpacing industry growth in the current year and looking to improve cash flows as well. To discuss their targets for FY24 and overall outlook, K Mahendra Kumar, the global CFO of the company, is joining us now. Mr. Kumar, good afternoon. Thank you so much for joining us. It's been a very strong performance in Q4 for you, especially on the margin front. When you talk about outpacing the industry growth in FY24, can you tell us what kind of growth rates are you looking at, both on the revenue and margins as well?
Well, actually, we don't give that kind of forward-looking guidance as a policy. But if you are talking about specifically about the Q4 results, definitely the content growth is what actually helped us. As you know, I think one of the largest customers that we have hasn't actually done well last year, but still actually we could register significant growth because of the content growth in the vehicles. And we expect that the same trend continues going forward also.
So any numbers that you could help us with, ballpark? Will it be a double-digit kind of revenue growth? Would the gross margins inch up, say, closer to 40%? Something to work with?
Yeah, like as I said, I mean, we don't give that kind of guidance, but yeah, internally we do target strong growth going forward in the outer quarters also. So when, as you could see already, I think last year we registered about 17.5% growth compared to the previous year. So yeah, we are aiming for double-digit growth for this year also, but we are not committing or we're not trying to give any guidance on that.
Got it.
Okay, we take that point. You have an order book of around 5,200 crore rupees. EV was a small part last year, 1.5% in FY23 in terms of total revenues. But can you give us a sense of how much can this contribution go up to? Will catering more to the EV side of things improve margins as well? Is it margin accretive segment for you?
Yeah, it is. It will take maybe a couple of years to reach the levels of about 1,000 crores in terms of the EV-based revenue, which could be maybe about 15 to 16% at that point in time.
Okay, all right. And in terms of order wins, close to 35% of your order wins are from EV players. How does that translate into your order book if you look at it in FY24? How much of this 5,200 crore rupees is executable in FY24 itself? And what kind of order inflows are you looking at?
Yeah, in terms of order inflows, we are expecting that a similar trend will continue in the outer years also. In terms of how much of this will exactly convert into the immediate revenues for the next year, I think it's difficult to predict, but it will spread over the next 2 to 3 years. Maybe 20% of that may actually happen maybe in the next 1 to 1.5 years. And thereafter, the remaining thing will come in.
What's the pipeline of orders? I understand that in FY23, you totally won about 5,100 crore, out of which 1,800 crore came from EVs. Is this a similar run rate we should expect in FY24?
Yeah, in terms of order intake, yes, it should be more or less in this range.
More or less in this range. And any price hikes that you look...
Sorry, let me just correct you. It is not actually the order book. It is the fresh order intake which we took in last year in FY20.
Got it. The order inflows. And would you be looking at any price hikes?
You see, price hikes depend upon various things. It also depends upon how the commodity prices behave in the coming year. As you know, as a component maker, we generally pass on these commodity adjustment, price adjustments to the customers. So it purely depends upon how the commodities behave in the coming year. On top of that, as and when we launch new products, yes, there could be some changes to the price, and that will come as a mixed impact or mixed benefit to us.
Okay. What about your debt plans here? You had made a stake sale last year. It was done to pare down debt as well. The current debt as on FY23 is 1635 crore rupees. What is the outlook here? What kind of capex are you planning in terms of an outflow in FY24?
Yeah, so 1635 is the gross debt. That's what you're referring to. I think we should rather look at the net debt because we also have close to 300 plus crores as cash reserves. So if you really see the net debt, we were at about 1,278 crores as of March end. And in terms of for the targets that we have, we are aiming for significant free cash flow generation this year. So that should actually reduce the debt level further. But as we mentioned in the earlier investor calls also, I think most of this reduction should now happen in H2 only. Because H1, of course, we are still stabilizing various things. But a significant improvement should come actually in H2.
What's the contribution of your top line, Bajaj Auto?
See, at the total level, about close to 38% of the revenue comes from Bajaj.
Okay. And are you comfortable with a very high exposure to one particular client?
I mean, Bajaj is a market leader, so I don't think that's a big issue. Having said that, if you really see the recent order intake, the reliance on one single customer is actually coming down. So that's something which should help us in the long run. But as of now, there are no concerns.
So how would you, can you give us some numbers to corroborate it? If Bajaj Auto if your top client is 38% of your revenues, then it should account for about 2,000 crore of the order inflows for FY23. What was the contribution of the top client order inflows, just to understand how that order inflow mix is at least changing?
See, if you really look at the order inflow mix, there are two things which are happening. One is the mix of two-wheelers and four-wheelers. If you really see the recent order intake, a majority part of that, and nearly more than 55% of that came from four-wheelers, not from two-wheelers. And then similarly, if you really look at the order inflow coming in from Bajaj also, compared to the overall thing, it's significantly less. I think it's close to about below 20%, 100%. So most of the order intake is actually coming from the others.
Got it. So Bajaj Auto's order inflow is about 20% of the overall. And you said four-wheeler is 55 or 65%?
56% is four-wheeler.
56%.
The remaining is...
Got it.
Okay, all right. I wanted your sense on the export markets as well. What is the split between exports and domestic market right now? What kind of capex, I was just reading a report which suggested that over next couple of years, you will be looking at investing across the globe, around $100 million in the next 3 to 4 years in both the Indian and global markets for future growth. What are these plans? Will you look at adding some more capacities? Will you look at just adding on to revenues from current capacities? What is the plan here?
Yeah, first I'll answer your question on exports. So, see, instead of looking at it as export, we should look at it as what's coming from overseas and what's come from the domestic market. So, if you see it that way, close to about 18% of the total revenue comes from the overseas markets, and the remaining 82% comes from domestic. And we, of course, in the coming years, we are surely going to focus more on growing the exports also, and of course the revenues from the overseas markets. So that will continue to be the focus area. Now coming to the capex part of it, the next 12 months maybe we'll be spending close to about 200 crores at the global level in terms of capex, and most of it will actually go to take care of the new product programs and new orders which we are going to win. Because in the existing capacities, we already have enough of spare capacity. We are currently operating around 60% levels. So that gives us enough operating leverage in terms of growing our revenues. So we don't have to invest more to actually grow revenues in the existing products. Whatever we're going to invest will be for the new products and the new range of products which are going to launch.
Okay. All right, Mr. Kumar, it was a pleasure speaking with you. Thank you so much for joining us, detailing what happened in FY23. Most importantly, what's the outlook going forward in FY24? That's Varroc Engineering. It's time to slip into a short break. When we come back,